Hello, good morning. So I'll try to use pictures just so that anybody watching this will be able to understand it very well. Okay, yes. So I'll be going back to the basics. So candlesticks. So for a bearish day, expect price to open at the top and close below. That's for a bearish candle. And I'm using for an example the daily candle, which is also um, your daily time frame. So that means the daily candle will take 24 hours to form, and this would be your high. Your high just means okay, price was once here, but nothing happened. It left that place and then it came back. Okay, it's also called a wick, or like the root here, upper shadow. This is the real body for the daily candle where a lot of things happened, and then price came down here, it left, came a little bit higher, but closed here. So it means market closed, it went down, it opened up here and closed below here. Okay, so for a bullish day, it means the opening price for that day, the market started for that day below here and then closed above the opening price. If you get that, closed above the opening price, and if, like I said again, market came up here and then it left, maybe some other reasons, and then it closed here, but it didn't close below the opening price, it closed above the opening price. Same thing happened here, called a lower shadow, but it's mainly called a wick for small talk. I don't like all this no long talk. Lower shadow, just call it a wick. Okay, you see why when I talk about inefficiencies. So I'm just saying this so that when I start talking, I'll not be talking deep things. Okay, so the next thing is the bar chart. Previous one was the candle chart or candlestick. So the same thing here. Most people have not really seen this or understood it, but this is not really hard. Let me just take it to MT5 and then daily candle, right? Okay. So I'll just bring out my bar chart and then you see this. It's not colored red yet, so you just forgive me for that. Okay, so this one is actually a strategy. I'll explain why. But most people would not understand how to use it. Basically, market opens here, closes below. Same thing with like the candlestick. So let me just go back and explain it now. Okay, so like I said on the candlestick, for a bearish day, the market opens here and closes below. Take note of where it closes. Closes below the opening price. This is your opening price. This is your closing price. This is your wick. The market came to end. Maybe there was no support or resistance, or like some of you would want to say, it didn't stay here, it closed above the wick, like that other picture said, is a lower shadow, or like I would just call it a wick. Same thing here. So this is for a bearish day. Same thing. for a bullish day, you have your opening price, and then the market goes above the opening price and closes above it. That's when you have a green candle. That's when you have a green candle. I'm going to put all of this together so you understand it. So bullish, high, low, open, close. High, low, open, close. Okay. So you just get that. So anytime you see a daily candle, that's this. Anytime you see a daily candle and then you see this, just know that price opened here and closed above this for a bullish day, and price opened here and closed below the opening price on a bearish day. This is for understanding candles, basic knowledge. Just want to touch this again so that I will not leave some people behind. Okay, so you can just change your charts back like the way I did it. It would not be hard. Okay. So usually I would anticipate when like something like this should form based on some strategies I have come to understand. Usually it's called a Judas swing by ICT. Okay. But I'm not really going in depth into that. I'm just doing a breakdown. Okay. So for the Judas swing, you would expect something to happen around this weak area. That's for a bearish day, you would expect something to happen above the opening price to send price down. To send price down to close below the opening price. So if you're a support and resistance trader, basically what you do is once the daily candle forms, maybe you go down to your lower time frames and then you look for support below and above the opening price. If you're expecting price to close that day bearish, expecting, and you would have done this based on your weekly analysis and other things. So for a bullish day too, you would look for support or anything that would send price to go above the opening price and close above it. Basically what ICT tells us is we look for breaking market structure, fair value gaps, which I will talk on next, and some other other blocks, mitigation blocks, breaker blocks. I want to talk about that one now. So timing also. So for a bullish day, you expect something to happen in this weak area. Mind you, this weak area happens only after the opening price. That's when the market starts for the day. This weak area is when this weak area forms. So you look for anything that happens here that will send price to close above for a bullish day. Okay, so let me talk about fair value gaps or inefficiencies, and then I'll talk about another thing again. Okay, so this is one place that some people just don't understand, and I'm really sorry for them. So you remember that week I talked about a lot of people don't really take notes, but when you start watching the charts now after I show you this, you start seeing it. And like ICT says, when you see it, you can't unsee it. So for an efficient price action, the wicks must lap. They must join together. a joining together. Let's go back to MT5, back to candlesticks. You see all this here? See all this here? All this. The wicks must lap. They must either be that, oh, this one got to here and this other one got to this other place. Same thing here. This week and this other week, there's a joining. There's no space between them. Space or an inefficiency. Now, this is where we see one now. Look at the difference between this week, and this other week. So you have a gap here. That's an inefficiency. It means at one point in time, like here now, price was only delivering buy side to the market. So the sellers or people selling did not have any opportunity to enter the market. Price is not controlled by buying and selling pressure or something. Like I still say, price is delivered by an algorithm. And you see that if you learn more from me. So the algorithm delivering price will just be on a buy program, and then it will send price moving fast. What I call this, when I start seeing this, I just call it momentum for me. It means, oh, there's fast movement. There are other things so that would make price to shoot up like this. So if you go back to that picture now, this picture now, you will see that it's called an imbalance. So the way ICT explained it is, take for example, painters when they paint the house or something. Let's say they move very fast when they are rolling the brush on the wall, and then they have like some holes that are created. Let's say, for example, they move too fast and then they created one hole that was not really perfect. They would come back and patch it. That's while they are painting, they would come back and patch it, use paint and patch it. Same thing with the algorithm that delivers price. When you see an imbalance like this, just know that the algorithm that delivers price moved a little bit faster than it should have moved, and it created an imbalance, meaning it was inefficient. Okay, this is efficient. This is perfect. This is imperfect. Perfect, imperfect. Okay. And just like every human being or any man-made object would like to do, it would like to come back and visit that same place based on some principles and other things. It would like to come back, feel the imbalance, which is usually called a fair value gap, or you call it a gap. There's some other names, but if I start calling them now, some people will just stop the video. Okay, called buy side inefficiency, sell side imbalance, blah blah blah. I don't like to call that. Let me just do sharp so that this video not be too long. Basically, that's it. That's an inefficiency on imbalance, and price has to come back and fill it in. Secondly, one of the other things I used again was psychological levels. Psychological levels are not really complex. Most of the things I use are just simple. They're just double round digit numbers. I've tried to explain it to some people. It means, like, when you go to the market now and you buy something and they tell you, oh, it's $4.99. Only gym have ways to do it. Ways to do it before, I don't know about now. You go to Spa and you ask for something and they tell you, oh, it's $5.99. Basically, you want them to just tell you, oh, it's $600 now. That's what psychological levels basically are. I'll go in depth for anybody that still wants me to explain this a lot more. So let's go back now to MT5 and let me show you. I took a sell yesterday. So my chart now, and if you can see already, I already outlined a gap I saw. So there was already a gap that I was already here before, but let's forget about this. Let's forget about this. 1, 2, 3. You see the difference between this week and this other week. That's the inefficiency. That's an imbalance. And if you can see again, price turned down from right from around that place. Just forget about anything happening here. But let's move on again. You can see an inefficiency here. There's one here. There's a week here, and there's another week here. Difference between this week, that's an inefficiency. So what really happens is an inefficiency or gaps. I will just be calling them gaps now. Gaps. ICT says they would either act as support or resistance based on the market structure, based on your daily bias. Daily bias is more like you see, okay, there are specific things that happen, and then you say, okay, today we should have a bearish day. Today we should have a bearish day. That's what I say when I'm expecting a bearish day. So you say, oh, today we're expecting a bearish day, and then you start looking for some specific things. So I saw this gap here, and I just knew, okay, if the next day forms and this gap is respected, in a way, it means price will start selling. So what I did, I just entered a trade on Wednesday morning, which was the third day for this inefficiency. And then look at what's happened on Thursday. A week, this long week means price rejected this fair value gap here. I'll show you the same thing that happened last week, around June. Yes, last month of June. It's not far. Let me just go over there again. You see price doing the same thing it did here for consecutive days. So if you just follow me, one minute. Okay, so you can see that inefficiency there. If I didn't draw your mind or draw your eyes to it, you wouldn't notice. But once you start seeing it, you can't unsee it. You have to cleanse your soul. Okay, so you can see there's an inefficiency there. The difference between this week and this other week. And for like a week, price was just, you can see that it could not break above it, and again you can see the precision. You see this week, this candle week, it just touched it, and then there was a bearish day. Same thing here. There was a big move here. This is a new account, so I would not have my trade details for this new account. I just have just this. Okay, so basically this is what I use, this inefficiency, and then I added psychological levels. If I show you my psychological levels now, if I teach anybody psychological levels, that's even the best support and resistance. I don't need to teach you. I don't prefer the normal support and resistance they taught us with when we started trading forex. I don't know how most of you learned trading forex, but psychological levels are the best support and resistance levels you would have more success with, because you will see reversals from almost every single day. But you just have to add them with other things. Okay, so you can see from this inefficiency here, price was just rejecting it for this is on the daily time frame. So you can see for this day, once price got here, it could not close above it. When I mean close, let's say this blue candle now was up close above here. Okay, yes, we'll say one thing. But all the candles we are just closing either below here, or right in the middle of this inefficiency. Meaning this inefficiency here was acting as a resistance. This is the real support and resistance, like ICT will say. So that was what happened here. Now let's go to the Judas swing, or why the strategy I used. Okay, so let me show you when I entered the trade. I entered the trade at night or so. Yes, at night, because I was already expecting something to happen. So I entered it around 3 a.m. in the morning, usually when I wake up. And if you can see a gap formed there, when I say support and resistance, or what you should look for, if you use this, if you are using support and resistance and you use this, you looked at this high and looked at this high and they are the same. And you took this, it worked for you because this was above the opening price. This is where the opening price for the day started, above here. So if you support and resistance here, I've given you something. You don't need to come back again. So a gap formed on the 1 hour time frame as an inefficiency. You can see it here, and then sell off. I was not afraid when I saw that the market was just pushing above the market price so fast. That's what happened here. I was not afraid. I knew that, okay, if a gap forms here, that would be a big sale. So this was what I was looking for. Okay, and then if we add psychological levels again, take note of this level. 35.9003. Let's go over to my chart for psychological levels. So yes, where's the nearest psychological level? That's 36. This is the daily time frame, 1 hour candle now. This was a 1 hour candle, 1 hour inefficiency that I talked of. Where's the nearest psychological level? Yeah. Most times it just comes and touches this. But there's a way I trade. I will not talk about that again for now until maybe somebody asks for more. So psychological level, I just need it to not go above here, and then there'll be a massive sale. Okay. Similar to things that happen like this these days. You can see the next psychological level here. It was just bouncing, jangle over around there, send price up. So basically, I just add all of this as confluence. Simple.